The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, we kicked off the week on Monday with another solid day to the upside in cattle futures. Hogs saw a little bit of green as well. Not a lot to write home about, though, in the grains and oilseeds. Penny higher, penny lower type of trade. A quieter start to the week after all the fireworks we had on Friday that impacted the markets, especially the grains. Let's talk through things. Joining us here for analysis on Market Talk, powered by John Deere Operations Center. John Heimberg with Total Farm Marketing is with us. John, good to catch up with you. Hope you had a nice weekend. I know we had a Packers victory, you and I, to celebrate, which is always a good thing. It's better than ties. I'll just say
that. And then the Brewer victory as well over the weekend. So
yep.
We won't talk about the Badgers.
Yeah, that's all. My Hawkeyes kind of beat up on your Badgers, so we'll just let that one go under the rug.
I thought it was going to be worse anyway, but anyway.
Well, hey, that phrase, thought it was going to be worse. After Friday, I wondered if Monday was going to be worse, and here we are, grain and oilseed trade, pretty quiet on Monday. So, did we kind of flush out some of the headlines and more? Are we getting back to this void of no news to move these markets? I mean, what's your general feeling after Monday's quiet, penny higher, penny lower type of grain trade, John?
Well, first off, let's go touch on the bean side of it. That's where maybe the better news was. Just saw President Trump kind of soften his stance about China over the weekend. Treasury Secretary Bessent was saying those tariffs don't have to happen. It's up to China. So it just felt like it was a little warmer, and I think that's what gave us the strength on Sunday night in beans and probably still held in the ground here today. These keeping us somewhat positive in that regard. So still a lot of irons in the fire, per se, in that soybean market. Friday's close was not fun for most of the grain markets, and we'll see if this was just a pause day in that regard. So we'll see how things kind of play out as we get further into the week. Again, very difficult closes on Friday, kind of open up to the chance for some downside break just technically, and you mentioned the lack of information is a big part of this right now too. There's just things going on that we just don't have in front of us. We talk about managed money and the funds and the money flow. We don't get commitment of traders reports, and the numbers we get about the traders is estimates, and sometimes they're not worth the paper they're written on realistically in terms of accuracy. It feels like the money wants to move out of the corn market a little bit right here. We've been down 3 consecutive days. We've been down 4 consecutive weeks. They're not big drops, but it's still the trend has been lower. We came within a half a cent of taking out the October 1st low today at 410.5. I'm just fearful there could be a pile of stops there. If we do break that barrier, you could just see a bit of a technical washout to go back and challenge the $4 and that 392 area. I don't think is out of the question. I mean, we got to still look at what's in front of us. I know it's kind of a depressing talk here, but don't forget, since June 1st, we've added 4 million acres of corn, and then USDA added 200 million bushels, of old crop corn. So we just got a lot of supply. There's a lot of logistics issues that are going on in terms of where's this corn going to go. I got producers that are basically sticking beans in every corner of the cabinet they can to store them, and they're going to probably try to do the same with corn. But some of it's got to get to the marketplace, and I think that just could weigh heavy. So we'll just watch it. Again, last year we pushed into a low around the 17th of October, and that was back kind of retesting, that $4 area. So maybe we're headed there again just because that's kind of what the chart showed us, and we'll go from there. The one thing that does worry me, and I'm just going to put it out there, this is a heavy supply market. They have a tendency to bleed carry out. We've been kind of seeing the spreads move around a little bit in that regard. Excuse me. But September traded to 368 before it climbed back up to 399 at expiration. Is that an area we want to go test? I can show it where it can go there on charts. I know most people won't want to believe that, but at this time frame, if I'm sitting on bushels that I got to move, puts are cheap, volatility is low. Just put a floor under this market, and just make sure you got something, and just hope we're wrong. And this market can rally, and you got the bushels to be the upside. So, obviously, guys are in the fields right now. They're not really watching the market that closely, but just something to keep on the radar here. That just because with the lack of information, the path of least resistance may still be just lower here until we have some news that can feed the bull market.
No, and that's an excellent point you bring up. I know it's one folks probably don't want to hear, that the potential is there in this corn market in particular, but to your point, you can see it on charts. The potential is there. And so that comes back to, those risk management strategies, things you mentioned, puts, and it's things of that nature that can help you navigate these markets. I know a lot of folks will just look at their local cash bid, whether they're going to the elevator, the ethanol plant, whatever the case is here. And that's a different story in itself, but there is opportunities for reownership, protecting your risk, all these different things that, there's 6 dozen to another ways of doing this for many folks, John, but managing that risk in some degree right here could be crucial for this corn market in particular, just to try and limit any downside risk, right?
Correct. And again, puts it right now with the volatility where it is, options are actually very cheap, because the market just doesn't have a lot of fire to it at this time frame. I picked up some January puts underneath the March contract today. 420 Januaries get us to Christmas, at least through the harvest window. And they're 7.5 cents, 8 cents. That's pretty cheap insurance. So at least make sure you got a 420 floor under the bin. Again, if we take off, you're going to lose 8 cents, but you got the bushels. Farmers are naturally long this market anyway. And, so we've seen crazier things happen. Like I said, I'm not calling for that, but at the same time, if it did it, I wouldn't be just shocked that this market went down. The biggest thing is the balance sheet. We got to come back and look at those numbers. And I know everybody's thinking this corn yield's coming down and things of that nature. And I agree with that. I think this could be a 179 crop out there, maybe even lower. I don't know. You hear those stories out there, but we're getting into some of the better corn now, maybe in the harvest side of it. So we'll see how that plays out. But you go look at the balance sheet when the USDA added that 200 million bushels at the grain stocks report. And I wasn't surprised by that, just given the way the market handled itself all summer. We never really reflected tightness in terms of cash bids and things of that nature. That just July, December spread fell apart. Things like that just reflected that there's enough corn out here. The problem is, though, they put that into feed demand or feed usage. They lowered feed usage to 5.4 million. Right now they're expecting 6.2 million. That's 600 million bushels alone off of feed demand that they're planning on increasing from 24-25 to 25-26. Now it all won't come from there, but if you just take that 600 million out and divide that by 90 million acres, that's about a 6 to 7 bushel per acre drop in yield. And this balance sheet still stays over 2 billion bushels. So that's the reality of what we got right now that makes me cautious here. And especially with harvest going, like I said, the bushels are going to be moving. We got to get this crop somewhere. Plus the old crop that flowed late too is a big factor in here. And that just makes me cautious, this market.
Soybeans, I know we've talked about that a lot, and I was just looking at some of the basis and cash bid numbers. Especially you look at parts of the Eastern Corn Belt, Mississippi River, maybe some improvement there compared to, of course, the situation in the Dakotas. We've talked about that so much, but I mean, on the soy side, you look at these markets, futures holding in the 10 range. I mean, there's not a lot of opportunity, I guess I would say, but there's still some opportunity to protect your risk here. I mean, your thoughts bean-wise here as we get to the middle of the month.
Yeah, I watch what this market's doing here too. I think some of the strength we're seeing is just producers saying, I'm not selling at these prices, which is understandable. We're probably going to get export inspections tomorrow. We got them last week. The Grain Inspection Service is still running. That's the talk that we'll see that report again tomorrow. last year in this window, we were shipping out over 1 million tons of beans a week. And, we're about 500,000, I believe, last week. So that's going to be something that could be concerning in this market, just reflecting the lack of export sales out there, that need to move. That, again, just shows that Chinese business. That close on Friday, like I said, was extremely disappointing in that regard. And it does open us up to possibly go test that 990 low. And then we'll see. Now, I still think a lot of this hinges on what's going on with China. Do we get some type of an agreement? I mean, they don't have to buy a lot of beans, but I think if they just step into the market and buy beans, you can see the sentiment change. We could see prices pop very aggressively with that. And, then that could tighten up that supply picture. Now, from what I'm hearing from guys, depending on region, but it seems like the bean crop has been holding in there better than most people thought. Maybe it's still not where the USDA is, but maybe a bushel or so under. It kind of feels like the number I've been hearing. Just want to talk to people. So we'll kind of have to see how that all plays out. But again, we've just with last week's closes on Friday, we just kind of turned these charts a bit negative here. And again, path of least resistance without news to make it go higher. Sometimes it's easier to go lower. And again, we don't know what the funds are doing. If they're selling, again, we're not seeing the commitment of traders reports, and those things just kind of just show the direction of the money flow.
John Heimberg with Total Farm Marketing joining us here today on Market Talk, powered by John Deere Operations Center. Let's go to livestock trade, John. Cattle, another day to the upside in futures. Green on the screen with both live cattle and feeder cattle. Front month live cattle and back month feeders kind of led the way, it looked like Monday, and it was maybe a quieter day than what we saw last week, but still more impressive moves in this cattle complex. Your thoughts as we continue the winning streak, 6 sessions in a row now, higher cattle futures, John?
Yeah, Friday's close in the live cattle and feeder cattle market was pretty impressive. I thought we were going to see some profit taking. We got that early, and then we got to mid-morning, and the buyers just said, we're in. And they pushed this thing quickly higher. Now, we're talking about different money flow. We've talked in the past that the funds have kind of walked out of their long position. They're at about 110 to 120,000 long, which is still a good size long position, but the first of the year last year, at the start of this year, they were pushing 156 was the record high up in that window. Just feels like they're in this market and they're pushing this again. They were, the market got a little bit quiet, got a little boring, got a little stagnant, kind of had a little bit of a, correction. Now, they didn't buy the last rally. Realistically, they were losing their length there. But now it just feels like somebody put the foot on the gas here. Now we'll see if the fundamentals can continue to agree with it. Nice move in cash trade this last week. Retail values at least found some footing last week. So where's our target? I've thrown out the 250 number on lives, 380 number on feeders. We're not very far from there, so I'm kind of might be revising that target a little bit higher. The biggest thing is, again, talking to cattle producers right now. They're sitting in their hedges, they're meeting their margins. It's getting painful though, and it has been painful for a while. So do we look at some strategies to hedge your hedge per se, owning a call or two over futures at least to give some cushion or give you some upside ceiling, in terms of those hedges. So there's some different ideas out there that can kind of manage this. I mean, obviously, if the money's there, the banker's supporting you, you got good hedges in, and you're locking in profitability in the wash, you'll be fine. But it just gets a little bit expensive when we get these types of runs like we've seen last week. That feeder market, that was just interesting to see. Again, why do we get that heavy strength in the back months? They've really been on a kick here lately. The front end's been basically kind of driven by the index. In fact, we're at a premium to the cash index for feeders, but that thing's making a move. It's another $1 higher today, and with October expiration not that far away. We got to get those two together. Right now, October is trading about $6 over the index. So interesting to see how that continues to play out. But that's just what I hear from people in the feeder market. The sale barns are just red hot, and the money's there with the cheaper corn. Guys are putting the money out there. Then they got to immediately find a way to cover themselves in the longer term, because obviously the margins get crunched pretty quickly if this market were to roll over, given the price of the input in those feeder cattle.
How about that hog complex? Saw a little bit of green there on Monday. That's been an interesting one to track amid all the strength in cattle. Hogs have been a little quieter here, I would say, as of late. What's your feelings over in lean hogs right now, John?
The funds moved it right before the government shutdown to a record long. Kind of took out the long from the previous part of the year, and it just felt like when we got up there in the $90 window in the July, the $100 window in October, that they were good, and they started pulling money out of this thing. You saw the correction that we had, and still are continuing ahead. Now we got down to $84 on December on Friday. Did find a little bit of footing there, a little bit of follow through today. So we'll have to see if maybe we've taken enough out here. Not saying we're going to go back and put new highs in, but maybe we go back and challenge a level above somewhere in the middle of the range, maybe around that 90, 87, 88 area in the December. And then we'll see if it gets expensive really quickly there. Now, we're still watching a decent cash market. The index, unfortunately, has been trending softer over the last couple of weeks. And, lost another 65 cents today. Those are some things that aren't there fundamentally to support this market here. And again, with the fund sitting on a big long position, it's pretty easy for them to walk out, and knock quite a few contracts out in a big hurry, especially if we don't know it. So we'll have to see. Longer term, I still like the hog market. Maybe we just got to find ourselves a point here, just because kind of like the beef side of the equation, that latest quarterly hogs and pigs didn't show us the farrowing intentions, didn't show us the numbers that we wanted to see, and the hog supplies are a little bit tight compared to where we were last year in this window.
Any other final thoughts, John? Anything you'd mention, reiterate to folks as we close out the show today?
Again, obviously it's busy times, and a couple producers just flat out told me today, I got so many irons in the fire, I'm not really watching the markets. So, but make sure you if you've got somebody to talk to that's involved with the markets, make sure you're just reaching out, saying, hey, what's going on? Because news changes quickly in this cycle. And obviously when you're focused on getting fields harvested, it's hard to keep that iron in the fire per se. So just like Zen, make sure you find 5 minutes a day just to kind of make sure you know what's going on in the marketplace. If you got somebody like myself you work with, give them a call and just say, hey, what are you seeing? What are you hearing? Just so you keep yourself in tune with the news. That's my biggest thing right now, because things can change very, very quickly, as we've seen a lot of times here in this current environment that we're in.
All it takes is one post or one news headline, and things can change in a heartbeat. That is a great point. John, if folks want to reach out to you there and have a conversation at Total Farm Marketing, how can they get in touch with you?
Sure. Love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
With that, John Heimberg, Total Farm Marketing. Always good to have you join us here on Market Talk, powered by John Deere. Have a great week. We'll talk to you next week.
Sounds good. And go Brewers.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.